right, folks, just a reminder, these trades are done in a simulator. It's important to understand the limitations of hypothetical results. Make sure you read that hypothetical risk disclaimer you see on the screen. If you have any questions about what it means, please feel free to contact us. You can email trade@infinityfutures.com with any specific questions. Thanks again. Hey everybody, this is Patrick Zielbauer from Infinity. Thanks for taking a look here again today. So it's about 9:07 on the 24th of September, and I just want to give you a quick heads up on what I'm looking at right now. So the S&P, NASDAQ, Russell, and the Dow. What are we looking at? Well, the Russell is a bit of an outlier. It's down about a 0.5% as we're talking, whereas the S&P and NASDAQ are up slightly, and the Dow is barely down. So this is one of those days where there's a little bit of disjointedness among the indexes, which is usually attractive to a sort of choppy, rebounding, reversion to the mean type strategy. And earlier, I was looking for the market to, and the S&P to pop up over that half MPD line, and same thing on the NASDAQ. That's what the ellipse represents. Sometimes what I'll do is I'll draw an ellipse that the upper end of which represents the, my furthest away short order that I have working. So right now in the S&P, the micro, if I were to bring that up, if we were to actually go up to 3010-ish, you're going to see that I was working in order to sell 4 micros at 3010, which is up, right around here. So that doesn't necessarily mean I wouldn't be willing to sell it higher than that. It's just that as I put the order in, I just made a note of it. And I like to use the ellipse or like a rectangle because I like to look at a range of prices rather than a specific price because, I'm not perfect and my entries are often not. So what basically happened was the market went up over that half MPD. Because I'm utilizing the micros in this case, it doesn't make me as nervous to put a short on early. A lot of times with these MPD lines, you're waiting until these extreme values have been reached, and that's the case a lot of the time, and you have to sort of use your judgment with respect to that. But with the market having such narrow ranges over the last week or so, with the lack of enormous economic data development and such, I thought it's only a few micros, and I'll put them on here. So I did scale into a little position. That position is still on, the average price of which is 3,008.25, as you can see here. So the market is in our favor a little bit. Um, it came down through that lower MPD, and I actually tried to. I should have had an order working in advance. I didn't. But what I would probably do is work to buy one of these back around 3002 right here. So if the market starts to fall off, we'll pull one of them off, and that will leave us short the 2 micros. And at that point, I'd probably just leave a stop at 3008 or so and just leave it for the rest of the day. And if the market really dumps off, you end up with a couple $100. So that to me would be sufficient considering the small amount of risk that is being taken utilizing the micro position. So that's what's going on there. And then for the NASDAQ, that one I actually did catch a little bit of because I was fast enough to have an order working down here. The market did the same thing, went above that upper MPD. I had a couple of sell orders in. In fact, I still have a couple of sell orders in up there around 78.95, which represents the upper end of that ellipse right there. So this is the area that I was saying, okay, as we approach that upper MPD, I'm okay with the idea of being short more from there. And that just never happened. It didn't get up there, but it did fall off a little bit. And then I had one order to take one of the contracts off, which is why there's a small realized gain instead of everything being unrealized. And at this point, it's only one. I mean, it's one tiny micro Nasdaq. There's really not a whole lot of risk here relative to what we're all used to normally following. So I don't really have a plan for this right now. I think I probably would just leave it be. Maybe in case there's a quick spike down, I would put one, maybe a target at, let's call it 63 and a half or so, or maybe 66 or 67, let's say 67 right here, which puts us right in this area. So if that gets filled, we'd end up being flat. And if we really fell off down below the lower MPD around 78.57, which is where the lower MPD is right now, I might actually consider, scaling back long there, depending on what the other indexes are doing. The Russell was kind of the oddball. It was falling off early. My hope at the beginning was that I could scale into a long Russell position and that the other markets would pull up the Russell, but that never really happened, and there was never a really good opportunity in the micros to put those on, so I just didn't bother with it. But I would actually consider it here pretty soon. If this thing really keeps going and the other indexes don't respond, I might consider putting one on. In fact, I think I'm going to. So if this is just the micro Russell, I'll just put one on right here. That's going to put me long from 56.20, which is right in this area, And there's the previous day's low is down here at 52.20. Maybe I'll put one more on in that area just to see if it gets probed like this. Okay, so now we're working another one there, so I'll leave that be. And then with the Dow, the Dow did spike near that lower MPD line. Not a lot of conviction here. It didn't follow through. It's not rebounding all that quickly, so I don't think there's much to be had there. So that's kind of where things are at right now. And again, this type of trading with the use of these micros, I think this is a smart way to use the micro contracts. I'm not going for a few ticks at a time. There's no hyperactive scalping taking place. The market's moving enough right now, even intraday, especially if you look at maybe two or three or four of the indexes, where you don't have to trade a lot of contracts to make or lose, reasonable amount of money. And so, this is the way that I think these contracts could be effectively employed by our typical customers. And I hope that you find value in this sort of analysis. So let's see what happens. The charts you may notice look exactly the same as the other videos, except I did add the previous day's uh, open, high, low, close study on here just so I could kind of get a picture looking backward a little bit, because I'm recording in a small area on the screen and I can't fit the entire chart up there. So I wanted to make sure I could see some indication of what was going on the prior day, especially with the previous day's high and low. All right. So we'll be back a little bit later and we'll see how these things play out. I'll give you another update. And if you have questions, please comment, tell your buddies, and share it with your friends. And feel free to contact me as well. I certainly appreciate that. See you in a bit. Okay, everybody. Again, it's Patrick. It's about 9:23, and again, just another little update here. So the Nasdaq did make a new low. In fact, everything really made a new low, and that left us flat in the micro Nasdaq. So there is no position left there. All right, in terms of an opportunity to re-enter, if I wanted to do another counter trend trade, I'd probably look for a new low, significant new low, maybe by 20 or 30 points before I'd be willing to get long again. Again, just depending on what the other indexes are doing. Alternatively, for the trend followers out there, this actually does seem like a pretty decent sort of sell the short-term rally situation here, because all the indexes are making a new low all at the same time. So when we see something like that happen, that's a situation where counter trend trading is significantly riskier. Just as we were talking, you may have seen the Russell or the S&P actually got flat, and I was working in order to actually get us long one, which actually happened here. So that was a bit of an aggressive move given that they were all breaking at the same time. But what I essentially did was I had an order that would effectively reverse us. So it took profit, left us flat in the S&P, and then got us long one contract, basically in the hopes you'd get an instant rebound like this. So that's kind of what's happening right now in that situation, which is kind of I think a bit more of a gamble than I would normally be comfortable with. That's a situation where you say, okay, maybe I just work a stop at break even just to see if we get a really quick rebound. If it wants to go lower, which it very well may, I don't want to be long for that ride. So we'll just kind of leave that be. With the Russell, we bought one contract earlier at 56.20. That one's not looking so good, but this is around yesterday's low. It's a tiny, tiny contract, 1/10 of one E-mini Russell. I mean, a really, really small contract. Not concerned about that at all. So it looks pretty good for now. I'd say we look for a little bit of maybe a quick rally here, maybe enough to get back to the lower MPD area in this area or in this area on the S&P. The Russell, looking pretty weak, but we only have the one micro on, so really nothing to be concerned about. And then the Dow, just not really forging its own path, but really moving sort of in lockstep. You can see with the Nasdaq and the S&P all look very similar in terms of the candle formation there. So, at this point, I would say really not much to do. We have one long micro E-mini S&P. We have one long micro Russell contract. We're getting a little bit of a rebound here, which is kind of what I was hoping for on the S&P because we did have that reversal in. And again, the contract size here is so small that it's not really something you have to be too fearful over as long as you're judicious with the way you scale into positions and that you remain looking at the market in context. Okay, as I said earlier, all four of these indexes making a new low at the same exact moment. That's not generally speaking something you're going to want to buy in too heavy too quickly, right? But if it's feeling a little bit disjointed where the indexes are, they don't feel like they're talking to each other, or if everything feels, very awkward in terms of being up or down, then, that's a situation where, you're sort of looking at a choppy environment that might lend itself to this kind of a strategy, a little bit better than a really trending market. So we started off really choppy. Things are looking a little bit more trend-like right now. So this is a situation where you kind of elevate the guard just a little bit, and maybe be a little bit more careful about counter trend positions unless you're again really judicious with the position sizing. So I'm talking through this because I want you to see how this position can shift on an intraday basis. I think looking at all four of the indexes is useful, and hopefully you're making sense of it. So we'll see what happens. I'll come back a bit later. Again, there's really not much to do at this point in my opinion, so we'll hang tight. If anything changes or I decide, to put something else on, I'll be back. All right. Thanks again. All right, everybody, welcome back. So just one more update here. It's about 9:47 now. A couple things have happened. So firstly, the S&P rallied up to its VWAP, and I actually had a reversal order in to get short there, believe it or not. So that actually was filled, and we were left short from about 3004, as you can see here. Why did I do that? Again, sort of like a reversal intra trade, so to speak. Well, the reason why I did that is because none of the other markets. This market is now in a downtrend. Trump's talking. There's a lot of chaos happening. We saw a couple of new lows recently. Everything is kind of looking quite similar. The Russell is still the leader to the downside. It's down about 0.75% now. The Nasdaq's making a new low right now as we're talking. So it's just very clear that this market is struggling to rally. And so when the S&P started to approach the VWAP, I noticed that the other markets were really nowhere near it at that time. They weren't near. The other markets were not close enough to their VWAP for me to say, okay, the S&P is going to lead all of the indexes higher. So I decided, okay, instead of just selling the one long S&P, I actually sold two there, which left a short one contract, and that's the case right now. So right now we're short one. There's a target down at 29.96 and 3/4 that I actually probably will cancel. I'm gonna just let that go, and then I'll just leave the stop at 3003 and 3/4, let's say. So that would, potentially carry us into the entire rest of the day if the market were to continue to break lower. And it's a pretty relaxed position. The Russell is still, this is the regular Russell. The micro Russell that we've got is still long. I have two contracts on. The second one was filled. Again, 2/10 of one mini Russell contract is a really, really small position. So I'm going to leave this on just to see if we get lucky and we do get some kind of a rally. If it gets really ugly, I could probably take this off. But again, I mean, we're talking about such small dollar amounts here, it doesn't really bother me. So we'll see if that starts to make its way back. But in the meantime, we just kind of sit tight. I mean, everything's up a couple $100. Hasn't been a ton of trading. Again, not a very stressful way to trade, especially considering the stress that the markets are under in general. And again, they're moving enough where you don't have to trade a lot of these contracts at a time in order to get enough out of the day, in my opinion. So, we'll sort of see what happens here. As of right now, we just have the short one S&P from 3004 with a stop at 3003 and 3/4, and then we've got the Russell contract, two long contracts from an average price of 1554.20. So that's still within reach as well. If we get a bit of a rally there, maybe I'll start to cover that, or maybe get a stop in at break even and forget about it until 3 o'clock. All right. Thank you again for listening. We'll have another update soon. Bye-bye. Hi, everybody. Welcome back. Just one more final update for today, probably, unless something else wacky happens later on. But there was quite a bit of movement here in the S&P. So if you recall from the prior clip, we had reversed our long at 3004. That made a short one contract. And so the market just really started to fall off. And, I was tempted to tighten that stop up really, really tight. I actually moved it down a couple of times, but I never kept it less than about 10 points away or even maybe a little bit more from where the market was. So it never felt like I was strangling the position. Well, the market ripped lower, it kept going lower and lower. I finally decided to put the stop at 29.75, which is what I did. And then this news came out about Trump releasing the transcript of the Ukraine call, and the S&P rallied really, really strongly. It actually took me out of the trade at 29.75, and now it's actually moving lower again. So, stop placement is an imperfect thing, and it would have been nice if I had just left that a little bit more breathing room. But still, nonetheless, that's a 29 point move in the S&P that we caught with that little trade, or that trade idea. And I think that's just a good example of, what happens when you give these things a chance to breathe. You at least have a chance to stick with something that can run, for a good portion of the session. So that'll probably be the last update for today. If the market rallies and we start to find more space in between these MPD lines, or the market starts to bounce off of those a little bit, maybe we'll get another idea out there. But it's already 1:45 in the afternoon, so that might be it for today. But I hope you found it useful. Please let me know if you have any questions or you'd like to discuss this. My email address is just pz@infinityfutures.com. We'd love to hear your feedback. And don't forget, again, to share our playlist and our YouTube channel with your friends and trading colleagues. Hopefully everybody can get some good value out of the time they spend here with us. Okay, thank you again. Have a great day.